Hello, I'm Juliet Sarli. In this week's edition of IG Macro Intelligence, we take a look at the recent sell-off in precious metals and what it means for ASX-listed stocks. Well, gold prices have started February on the back foot after experiencing their biggest one-day plunge in over a decade at the end of January. The unwind in gold and subsequently silver prices came after a dramatic surge which had seen precious metals hit all-time highs. Investors had been rushing into gold and silver on fears of geopolitical instability, currency debasement, and threats to the Fed's independence, with speculative buying from China adding fuel to the move. A decision by US President Trump to nominate Kevin Warsh as the incoming Federal Reserve Chair saw investors bail out of the safe haven trades on the last trading day of January.
Happened reminds me of a disorderly retreat, just like what we've seen in Chinese history back, I think it was the 4th century, the Battle of Fei River, where a controlled retreat turned into a complete stampede where the Qing army just basically routed themselves as they trampled over each other. And that's what we saw in the precious metals market, especially with silver and platinum, and to some extent gold, but gold probably not so much. I think people took leverage bets on silver and platinum group elements, and a lot of those must have closed and got crushed.
Well, David Lane from Ord Minnett is staying invested.
We have seen a big sell-off, but that doesn't necessarily mean that it's going to the floor. We've seen a pretty strong reason for gold to be up for quite some time. I think the global uncertainty still is around. It will be around for quite a long time. We are still battling with inflation, definitely here in Australia and even in the US, there's still inflation there. So a lot of those fundamental reasons that gold has been strong are still there.
So should investors be taking profits in gold stocks or doubling down amid the downturn?
Yeah, we've got buy recommendations, as I said, on a number of the big stocks. Ramelius is one that we really like. They're off about 7.8% today. We still think it is a good stock. We like Vault Minerals. It's off nearly 10% today, so potentially an opportunity to look at that. Pantoro is another one that's off about 7%, so we like them as well. Some opportunities there, but certainly a volatile time.
Well, Ord Minnett has a $5.10 target price on Ramelius, just slightly below the average target price of $5.12 as surveyed by Refinitiv, suggesting the stock can rally a further 18%. However, UBS has downgraded the stock to neutral from buy, albeit with a higher target price of $5.20 up from $4.20, as the global strategy team updates its near-term gold price to $5,200 as a sustainable target for the remainder of 2026 before what they call an eventual tapering. Well, the near 30% decline in silver also saw Australian-listed silver miners come under pressure at the start of February. Yet a surge in demand for silver recently saw Global X ETFs launch a second product to meet appetite for the metal. The Silver Miners ETF, SLVM, allows Aussie investors to access a global portfolio of companies across the exploration, mining and production of silver, benchmarked against the Solactive Global Silver Miners Net Total Return Index.
Invested in explorers, miners, as well as royalty companies that are very involved in terms of silver. One of the struggles for Australian investors is that there's really no way for them to access silver miners in Australia, even though we're such a commodity-heavy country. I think there's only maybe one or two names in all of Australia, all of the ASX, that actually offers pure exposure to silver. So this ETF is trying to address that issue and provide investors with a very diversified basket of silver miners, whether that be in the US, in South America, Asia, or more.
Well, Chris Judd from Truity Macro Fund also doesn't think silver has lost its shine.
Ultimately, silver is used in military applications, it's used in solar, it's used in EVs, it's used in a whole lot of applications outside of it as a monetary asset, which is behind the move. And whilst we think the near term is going to be volatile, we think this is a process that's likely to play out over years and not months.
Judd also likes Viridis Minerals and Mining as he looks to exposure across the commodity chain rather than piling into crowded trades.
We've got some exposure to tungsten, we've got some exposure to silver, and it's not quite as simple as all being one trade, but ultimately I think we're in a commodities bull market now. This is a bit of a special situation because we really like this company and their near-term prospects, but other than that, we'd probably look to maybe pick out commodities that haven't run as much yet and start to build positions in them. Something like manganese fits that bill.
And analysts seem equally positive on the stock. The average recommendation to buy, according to Refinitiv, with a target price of $3.68, suggesting a 113% gain from current levels. Well, the general consensus seems to be that the pullback in precious metals at the start of February was nothing more than a correction after a parabolic rally. Deutsche Bank sticking with its $6,000 target price for gold, drawing contrast from the recent pullback with the weakness the safe haven witnessed in the 1980s and more recently 2013. Morgan's Fergus Humble agrees.
I just think that all of the things that have been causing gold to rip, they haven't gone away. I think a lot of it was, a lot of it's probably profit taking. I think is this latest sort of drop off, and then we saw a bit of the sentiment improve even overnight. I think it was down over 10% at one point, and then it ended up down 3 or 4% in the end. So we think long term, the argument for gold is still there.
And that is your IG Macro Intelligence. We'll see you next time.